everybody.
Sean and Kelly here, Price and Price Group of Samson Properties, and what are we talking about?
I love this. We are going to go through 4 at a time, 32 ways, this is for our buyers, 32 ways to get your offer accepted in the Northern Virginia real estate market.
Nice, here we go. Okay, so we are going to dive into strategies that buyers can use to get their offer accepted. And there's gonna be some that are very, very obvious.
Yes.
There are gonna be some that you're gonna be like, oh, that's quite interesting.
Sorry about that. I think it was a gray one.
So I think it's gonna be interesting. I think it's gonna be good.
Yeah.
Now, at the time of the recording of this video, we are in a seller's market. So
but not the same.
Yeah, it's not the same.
Not the same as it ever was.
Not as aggressive as it has been,
Yeah.
but it is still a seller's market. So a lot of this is geared towards that. So keep that in mind if you're watching this, 2 years from now and we're in a buyer's market. Some of this
time is
apply.
different, states are different, even counties are different. So we're talking about specifically Northern Virginia.
Yeah, this is true. Even DMV or Maryland and DC are different. So yeah, okay. All right. So what is our first item?
Well, let's talk about number one. Obviously, is you're going to go over the asking price.
Yes.
Right.
Yes.
That's going to be your offer price that is put on the offer sheet that if ratified becomes the contract.
Yep.
Okay, so you talk about how you're gonna help them come up with that.
So if this video had been shot 3 months ago, it would be 100% your over asking price. You have to get the property. Now, we're coming across some properties that are maybe on the market for 20, 30 days, something like that, where you could actually come in at the asking price.
That's a little high, 20, 30, right?
Yeah,
that's still a little high. That's not
that's
too usual.
Yeah, it's not very usual. That's why I'm saying. So you come across those, you might be able to go in at asking price. But what we have a lot of buyers do, especially when they're first starting out in the market, is they'll find a property they love, and then they're like, okay, so it needs new carpet. We need to paint the bathroom. We need this. So can we come in $10,000 under? And the answer is not when it's the first weekend on the market and you're competing. So you've got to go over asking price. And even
if it's the second week on the market, then we call and it's like, hey, we asked the seller's agent, do you have any other offers out there? If the answer is no, and that's still kind of rare that the answer would be no at that point, then maybe you can talk about asking price with some contingencies or something, but not really.
Yeah, but if
you can't really okay, I want this kind of carpet, $5,000. I want this, and it's like you take that away from the price. That still doesn't work.
And you bring up a good point. Let's say you're in the first week of the market. You bring up a lot of good points. Let's say it's the first weekend of the market, and let's say that you want to put an offer in, and you're the only offer, and you want to come in under asking price. Well, from a seller's perspective, there's no reason for them to take an under, unless they're desperate, unless they have to be out of that property and do this. They're not gonna take that offer because they unless they really know that they set a really high asking price with room to negotiate. But that usually doesn't happen.
Well, and this point that you're bringing up kind of brings me. It's a very good point, and it brings me to number 2. Agent to agent relations really, really matter. So to the point you were just making. We prioritize agent to agent relations because we might do a deal with you, Mr. Buyer or Seller, once every couple of years, and we maintain contact because we love you guys. But with our agents, we're usually doing deals regularly, and we gotta be truthful, honest, quick, and
respectful.
Yes, very respectful, and we make a name for ourselves. So talk to me about what that would look like. What you were just saying, if it had been on the market for maybe a week, then you usually call the agent and they'll spill the tea, right? Hey, they actually need to get out sooner, right?
You can strategically ask questions to buy sellers agents to where they may give you information you can use to know how to write the offer, and that relationship is very important. For 2 reasons. Number one, for them to be honest with you, because if they know you and they know that you bring buyers that can close the transaction,
they're never going to go against what is in the best interest of their client.
Right.
But they might be able to say, hey, what's most important to them is the timing, right? And no contingencies. If we can get this deal done in 2 weeks, then they might be willing to take a little bit less. So that's the kind of thing that when you have these good agent relations, you get into those conversations.
Yep, and that's in those, when it's been on the market for a little bit. But if you're in a multiple offer situation, the agent-to-agent relationship is important, because if you, for example, if the agents know that you submit clean contracts as an agent, that's going to get your offer not automatically kicked out of the list, because there's so many details, and they have to know that the agents will get the process to closing.
We've actually gotten our clients' offers accepted in multiple offer situations at least a couple of times that we've heard of just this year, and they've said, because I know these agents, I know they close on time, I know their buyers are pre-approved, like real pre-approvals, and even if they were like a few $1,000s net under what the other offers were, right? So because they knew, so that's a huge thing.
Huge. Okay. So number one is be real about the price. Number two is relationships matter, so make sure you're with an agent. Make sure you feel comfortable with your agent, because if your agent's kind of condescending to you, they're likely going to be that way with other agents, which will repel other agents, which weakens your position in a multiple offer situation.
And if they talk bad about other people, that's like, we know who these agents are. Like we know this. And so when they come across our desk in an offer, it's kind of like, what's this going to be like? Also, let me make a point. We're with an agent, right?
Yes.
So sellers agents, if we're getting just somebody who's unrepresented, that's a lot of work, and there are a lot of cracks that things will slip through, and it's just not the safest bet for our sellers.
Well, we have
so do have an agent. It's much better than going it alone.
That's a really good point, because we had one transaction that we did that the agent, the seller
I went right into that's 2 good points I've made so far. Those points.
The buyer was unrepresented, and we were representing the seller, and we helped the buyer write the contract. We couldn't advise them on anything, but they let a contingency expire, and then they wanted to void the contract after, and there's nothing we could do. Nobody was there guiding them. And the gentleman almost lost his entire EMD.
It's a sad
He voided
situation.
the contract, then he came back into the contract, and it cost him, there was a lot of mistakes this guy made. And the seller kept going in and out, because she was like, what's happening here? Are we in contract, are we not? And we can't work for the unrepresented buyer. So there's a lot of risk for sellers. So you may think you're coming into a transaction without an agent, and you're going to get a better deal, but the fact of it is that agents that have worked with unrepresented buyers know that that's a risk.
Like, they charge their sellers
extra
to have to navigate with an unrepresented buyer.
So you're not really saving the seller any money, and it's putting you in a bad position because you have no representation.
You have no one looking out for the things that, Anyway, we've
Big
gone on that too long.
All right, so that was 2A. Item number 3.
Yes.
Lender. Consider using a local lender that has a good reputation. Okay.
Let me speak to this for a second.
And a lender, not necessarily the bank.
Right.
We have lenders from some banks that are horrible, but they have other lenders from the same bank that are great, and we know that. So
and that they are not going to fake you out because it's their job, right? Okay, so I have my lender's license. You guys who watch this regularly, you know that, right? But it's inactive after however long I did it, right? And I knew, I learned relatively quickly that I am amazing as your real estate agent. Like, I know the shit. But as a lender, I'm like, there are so many out here so much better than me. Like, you have to, if that were my only job, I would still be doing it, because you got to bring home the bacon, and I'd be like pounding the pavement and going for it, because I don't have to. You've got to understand there are other lenders out there who do work like that because they have to. And it doesn't mean they're all created equal. And and like you said, it's not just the company they work for, it's the agent.
It's the actual agent. And this is another reason for having a realtor, and I hate to keep beating this in, but if you're working with a lender, the lender does not have a fiduciary responsibility to you, meaning they have to look out for your best interest. Now, a good lender is going to. The one, Tatiana, the one we're always on here with, the Mortgage Minute,
and there are several others, right, that we work with.
There are. But there are some lenders that don't, and they don't know about deadlines. They don't care about your earnest money deposit. They just are working the transaction based on what they're trained in. And you have to have somebody that's looking out for your best interest to stay on top of that lender to make sure that they're meeting the deadlines and they're getting these things done.
Let me speak to something on that just happened recently.
You
made a great point. Okay. But okay, so the lender, the loan officer, right? they are working for you, the buyer, and they're great, and they might be really, really responsive to you, and they might know everything about their processing and their underwriting and your loan and your situation and all this. What you really have to keep in mind, you don't know everything about your real estate contract. Your lender doesn't know everything about your real estate contract. They know everything about their box of goods. And you know everything about your personal stuff and your work and everything. We know everything about your contracts. And
which is what is your legal binding obligation.
We just had it come up where a buyer is like, hey, for these reasons, it's going to be more convenient if I delay settlement and all of this. And
I'm just letting you know that we don't have to rush.
And they told their lender this. So when we're calling like, hey, what's going on with appraisal? What's going on with this? The lender's like, oh yeah. They are thinking about maybe delaying settlement a little bit. So we haven't ordered this yet, or we haven't ordered that yet. And we're like, they can't do that, right? Because they're going to be in breach of contract. And what lenders don't understand, and you, Mr. or Mrs. Buyer, seller, don't always understand, is a seller could have ratified your contract. Here, you're under contract. They don't have to disclose to your agent that they may have taken a backup offer that came across their desk after yours did that might be better. And if you blink an eye on some of the details of your contract,
you miss one little detail,
they might have the email ready and waiting, notice that we are voiding this contract based on whatever line, paragraph, and page, and then they're going to activate that backup offer that was better for yours. So
you lose the property, or you may lose the property and your earnest money deposit.
I mean, yes.
Okay.
That's all I'm going to say about that. It's stressful, right?
This is like I need a drink.
We take it really seriously. We take your money seriously. It's your family, right? It's your home.
Yeah. Okay.
Not that they don't, but they don't know. They don't know what they don't know.
Yeah.
You don't know what you don't know, and we know it.
We know it.
I also know the lending stuff. I'm just not great at doing the lending.
All right.
It's heartbreaking.
So number one,
yes,
you have to be realistic about the price and strategic. Put your best foot forward, depending on the situation. Number two, relationships matter. Number three, consider using
relationships matter.
Agent relationships matter. Number three, consider using that local realtor.
Yes.
Get number four, as a POFA. Yes. Yes, a POFA. So this is specific. Some lenders offer this, some lenders don't.
They don't call it a POFA.
Only
I don't think we're cool enough to have influence.
Yeah, it hasn't reached California yet, so.
We're circulating.
Yes.
Okay.
So a
pre-offer full approval.
Yes. So as a buyer, if you're using a loan, if you're financing your property, if you can get a pre-offer full approval, not just an approval, pre-approval, which is what you need to write an offer.
Right.
But if you can get a pre-offer full approval, when we submit that offer, number one, you're able to waive your finance contingency.
Yeah.
Which strengthens your offer without it costing you more money.
And this means that they've done.
Go ahead.
They've done a credit check. They've looked at all your documentation that's required for your type of loan. It's going to be like tax returns, pay stubs, whatever the case may be, which your lender's going to go through that with you.
They're basically fulfilling your finance contingency before you write the offer. That's why you're able to do this. You already had all the protection.
That's right.
And it just lets you go into the offer. You can shorten your settlement date, so you can compete with cash offers that can close in 10 days.
Yeah.
You can now close in 10 days because you're fully funded. You don't have to go through the underwriting process.
True.
It just gives you a strengthened position with the offer, and it looks good. The sellers love it.
That's right, because there are only two things that your lender has to qualify to give you a mortgage loan, right? That's you, the borrower, right? So everything about your credit and everything has to be approved.
Your hair.
I mean, you're not. If your hair has to be good, I'm never going to get a loan for anything. And then the other thing is the property. They have to approve the property. So you can. The pre-offer full approval is where they've done everything for you. You're great. You're golden. All it is that seller's property that you're putting a contract on, and this is where my license does come in handy, is because I can communicate this on your behalf. Like if we're representing you as the buyer, it's very easy for me to say, hey, seller agent, they've done this, that a lot of people don't know. These are the things that go into it being done.
Yeah.
And then if we are representing you as a listing agent, we know to ask. Every offer that comes in, it's like, don't tell me that's a pre-approval. They use pre-approval, pre-qualification.
You can use them interchangeable sometimes. And
you have to know how to get on the phone and ask the specific questions. So that pre-offer full approval, or POFA.
POFA.
Is the bee's knees.
Yes. And at a minimum, before you're looking at properties, get your pre-approval. You
Yeah.
have to have at least a pre-approval
Yeah.
to submit an offer. And you need to know your budget. You don't
Yeah.
want to be looking at properties and then find out your budget's $300,000 cheaper, and then there's nothing that going to fit your needs because you've had your heart set on this other price point.
That's true. And wait, before you cash buyers, hit screw
Delete.
this. And I'm not watching you anymore. We should have said this sooner. Instead of sending this pre-approval, you would have to have your proof of funds,
Yep.
right? So this is going to be bank
Your
statements.
puffins.
I don't know if we can try to slide another one
Yeah,
out
I
there.
don't know.
Yeah, you have to have proof of funds if it's going to come from like IRAs or some sort of investment. A lot of time, well, I'm going to say you really need to go ahead and have the confirmation from that company of how much of these funds you're allowed to withdraw and
Yeah.
at what time.
And screenshots do not work. We need
They don't
actual
work, I
PDFs
know.
and statements and all that stuff.
Yeah,
So,
because it's got to show at least the last four of your account number.
yep, and your name and everything. Okay. All right, so those are the first four. So to recap, we have.
Are you sure you don't want to do the rest of the 32 right now? I'm sure everybody
got
can't
7
wait to hear
hours.
what more we have to say.
All right, be strategic with your price. Be aggressive at whatever stage of the position that the property's on the market. Just be realistic with that.
Yeah.
Relationships matter. Your agent's relationships in the marketplace matter on your behalf because you're not going to be a part of those negotiations.
Yeah.
Consider using that local lender and get a POFA, or pre-approval minimum, but get that POFA.
Get the POFA!
All right. So if you have any questions, let us know, and we will see you guys next week where we go through number 4 through number.
Can we do math?
8.
Math!
I'm gonna wait to see what you get up with. All right. We'll see you guys next week.
Bye.
Hey everybody, Sean and Kelly here with this week's Market Snapshot. What's happened in the Northern Virginia real estate market in the last 7 days in under 5 minutes, and go.
Hey everybody. I'm gonna be really slow. Okay, the squiggly blue, I'm gonna start with the blue line this time. The blue line is the seller activity. That's how many houses have come on the market, they've listed, and now you get to shop around. That's your new inventory. The squiggly orange line, that's buyer activity. That's how many of you guys have actually put houses under contract. So, what does it all mean, Sean?
Before we dive into this, I would like to give.
Did I do something?
No, it was beautiful.
Okay.
It's beautiful. I'd like to give some context as to why we do the weekly market report.
Smart.
Let's say that you go under contract today. Today, at the time of this recording, is August 2nd.
And the time is 1:48 p.m.
Yes. That will. Oh, we have a meeting too. I gotta be quick.
Yes.
So, so you go under contract today, August 2nd. If this contract is in the normal processing cycle, escrow cycle, it's going to take 30 days. It's going to close on September 2nd, which means that sales data will be reported at the close of September. So on September 30th is when that will be counted in the market data for September.
Right.
Usually that market data will come out on September 10th or so to let everything get finished up. So if this is going into the media, it's probably another week or two after that. So if you if you go under contract on a property today and you're listening to what you're hearing in the news or you're looking at sold data, you're not going to see this data, this market activity. You're not going to make a call on this market activity until October.
Right. So, and how can you do that, right?
How is that going to help you? And that's what
today's
people are
decisions
using.
Can't be made based on, what would that be, mid-June?
Yeah, no, that would be
Or June?
what comes before June?
May?
Like May, maybe even April. Depending, yeah.
Yeah, okay.
So you can't make your decisions based on sold data. So what you do is we look at those are lag numbers, okay, what the sold information is. So what we're looking at is we're looking at new properties on the market or new listings, and we're looking at under contracts over the last 7 days. So we see the actual market activity, the supply and demand for the current market. So that's why these numbers are so important, because when you go out in the market today, you're going to respond to what's happening in the market today, not what happened.
I mean, you might respond emotionally to what they're saying on the news, but you can't respond with your offers
That's true.
and your list prices with what's happening on the news.
And if you're being guided by your agent to either price your house based on sold data only or make your offers based on this information, they're giving you 2-month-old information, and it's just not strategic. Okay, so let's dive into this. Buyer demand has been decreasing. We saw a huge decrease here, then we had a nice little pop-up for a week, and now we're kind of sliding back down. So buyer activity is slowing down a little bit. We've heard numbers from our brokerage about 20% decrease in showing activity. Kind of normal for the summer, so it's not something to be concerning. We're actually a little bit higher than where we were last year. So, but it's just a little bit slower versus what it was several weeks ago.
Right.
Inventory has been kind of on a slow and steady increase, which is nice. It's normalizing the market a little bit.
Give you a little bit of breathing room,
Yes,
some properties to look at. And,
buyer activity in the last 7 days is right here. That came down a little bit. Inventory rose like 1%. So our gap decreased just a little bit, which means that our strength of our seller's market came down just a little bit. So we're still hovering in a seller's market, but it's a calmer seller's market, okay? So we need to be watching these each week, because if these numbers start shooting back up, then we have to respond appropriately. If they lower the interest rates in September and these numbers start shooting up, we have to respond appropriately for that. If the inventory starts going up and the buyer activity comes down, we move into a buyer's market, then we need to know these things. So it's important to watch these reports each and every week, so you know real time what's going on.
This is really one of the amazing reasons why it's good to work with us, is because he's stat man.
And she is story lady. All right, so
I don't tell stories; they tell themselves.
Well, use the emotion. It's beautiful. You translate what all this means. So, okay, so for buyers, what does this mean?
Shopping.
It means go shopping. Yes, you can get into properties even on the first weekend. You might battle 3 or 4 offers versus 10 to 15.
Yeah.
But if a property makes it to week 2 or week 3, you might actually get it at asking price, or contingencies included.
We've been so lucky. Now more sellers have the time to allow our buyers to get pre-offer inspections. So you've got that protection. I mean, it's just. It's nice. Like you almost want to put on flip-flops.
Yeah, and if you're waiting for the rates to come down next week, take those flip-flops off, put your tennis shoes back on.
What you mean next week?
Next month. Thank you.
Thank you. Yeah, I think the feds are meeting like mid-September and
supposed to come down. So
supposed to, but some people said July, and what did I say? What did I say about July rates coming down?
Listening.
It's recorded. You need to go back, watch it back. I said, not gonna happen, everybody. It's not gonna happen.
You're the girl. You know that stuff. Okay, so buyers, it's a good time. Sellers, it's still a good time to sell.
I mean, it's still a seller's market.
It's still a seller's market, but you can't just flip it up there at any price and expect it to sell in any condition. Don't be flipping it. You got to put it up there in the right condition and the right price for that condition. So.
You have to put it in the right condition, don't it? Unless it's as is, like you're expecting it's going to be a tear down or a complete reno. No holes in walls.
Yeah.
And if there's carpet, just go ahead and know you're replacing it. Find someone to keep your pets. I'm just kidding about that. I love pets. You can get rid of that part, right? I don't want to see mine. I have pets. We have a dog and 3 cats.
Yeah, we do.
And a gecko.
And anything else?
I also love goats and chickens.
Yes, you do.
And donkeys, apparently.
I'm gonna put your goat. You need to send me your goat picture.
I will.
Yes, I'll put that.
That was so much fun.
Yeah. All right. Any questions? Let us know. If you want to talk about your specific situation, specific condition. That's the private part coming up. Your specific situation. Please feel free to reach out to us. We're happy to sit down with you and go through this with you.
Like, he's very happy to always talk real estate all the time. It's like a super fun.
All right. We'll see you guys next week.
Bye.
Hey everybody, here we are for this week's Mortgage Minute with Tatiana. Hi Tatiana.
Guys, how are you?
We are good. Technical disclaimer, Kelly forgot her laptop today, so we are shooting this on an old desktop and using phone audio. So if there's a disconnect between video and phone, just turn off the picture and listen to us.
Sorry.
All right. So how are things going? We haven't talked to you a couple of weeks. Has everything been going good?
Everything is good, and I'm wearing my imaginary good hat, or nice, whatever we call it, right? Hat.
Oh, that's good.
Yeah. So the last week and beginning of this week, the rates actually dropped. They fell to 6.73%, and its lowest level since February, as the bond market reached to sign of cooling inflation. This was 5 basis points lower than a week earlier, when it averaged at 6.78%, according to Freddie Mac. So the Mortgage Banker Association's Bob Brocksmith said in his statement that many borrowers may be hoping and waiting for mortgage rates to decline even further, which is what we expect to happen once the Federal Reserve begins to cut short-term rates. So buckle up, it might happen. But with that, I think we'll see more people competing, possibly prices going up, right? So here you see my beloved average rate chart. I didn't share
Yeah.
that one for a while, but you can see here what's happening since 1972, and all these little zigzags right here for those who have higher interest rates now and hoping for low rates. Those are refinance times. So if
Yeah.
someone who is watching right now has higher interest rates, they might drop and call me for refinancing.
Yes.
Okay.
Good.
Okay. So it'd be a good time. This is the whole date the rate and buy. Say date the rate.
Don't say that
I won't say that.
at all, ever.
Okay, date the rate and buy the home.
Yeah.
Because if these rates do start going down, that's going to be the time for everybody to do that refinance that we've been talking about for the last,
Yeah,
2
that's
years.
right. So that you got the prices before they go up,
Yep.
and then get the rate when it drops down. That's awesome.
So here's a little bit of thought for buyers right now is if that's going to happen in mid-September, they need to jump in the market now. Because if that does happen in mid-September and all these buyers start flooding the market, those prices are going to go up, and they can take advantage of the little bit of a lull that's there now. We were just talking about on our market report, there's a bit of a slowdown.
Mhm.
So now's the time for them to really jump.
Exactly.
Yeah, and
Okay.
I think we might end up seeing some sellers who have been waiting to, because of the rates, like the ones who had the really good rates. I think this is a little bit of a softer spike for
Yeah.
them to have to deal with if they want to move up, to that bigger house, or they had some regrets thinking, hey, I'm going to be able to work from home the whole time, and now they're realizing I can't, so they've got to move over or whatever.
Yep. So look, it's going to be interesting, but it's all going to start happening soon. So do you think they're actually going to cut the rates, or is it going to be another, we were just kidding?
I'll believe it when I see it. But everybody is very positive about it. If before we know that some opinions were going different directions, now everybody is
Yeah.
saying the same thing. So we'll see if everybody's right or everybody's wrong.
Yeah.
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 Okay.
I feel like it's going to happen. I didn't think it would happen in July, but the jobs report just came out, and unemployment, I think. And I feel like both of those were, I think they said lower than expected. And I think that's also a good sign for the Fed to be like, okay.
Time to not shut the economy
Yeah.
down.
So
Yeah.
I'm hoping.
We'll see.
Yeah.
And I
Okay.
know that, this time, this past week was a little bit slower due to, I think, people
Mhm.
going on vacations, and also some people are stalling because of the coming up elections. So
Yeah.
that could be, they try to boost economy. So before the elections too. So there's so many
Yeah, that's true.
factors playing into this.
Yeah.
That's a
Yeah.
good point.
Yeah.
Yeah.
A little bit of an election boost for one side or another.
Yeah.
Okay. Very good. Well, so we had a lot of challenges that came up this week. First of all, you have been a superhero for one of our clients.
Yes.
We'll dive deep into that next week because she has been struggling for a year, and we introduced her to you, and within a couple of weeks, you turned everything around for her. So we're going to deep dive into that situation next week. But in looking at the properties that she's been wanting to buy, we've come into quite a few issues with condo association approvals for FHA lending. So I want to kind of dive into that about, a lot of people don't know about the fact that condos have to be approved by the VA or by FHA, and does that affect conventional lending? Like, tell us a little bit about, like, in general with this, and we'll probably start picking your brain on the details of it.
Mm-hmm. Yeah, so just to give the history of that, condos versus townhouses or single family homes, right? It's different animals, so to say, because what's condo? You own a unit, you own the walls inside the unit, right? Everything else is owned by the association. And when you're getting the mortgage, no matter what type of mortgage you're getting, conventional, FHA, VA, we even have like outside the box, non-warrantable condo products. we look at certain guidelines for association to meet, because we want to make sure that this condo complex is being taken good care of, because it's actually, if it's a bad management, it affects the pricing, and it affects sellability, or there's no such a word, basically
Value,
resale. What is the word? I don't know. I'm a foreigner. Cut this.
Yeah, it affects the resale value, right?
Yeah.
Resale
The value
value. Yes, thank you.
Yeah.
So it affects all that. So that's why the complex has to meet the guidelines. The government programs like FHA or VA, for us to land on condos like this, they have to be approved by HUD, Housing Urban Development, on FHA, or Veteran Affairs on VA. So for VA buyers, if the condo complex is approved, it's a great, news. Nothing else needs to be done. On FHA, it needs to be HUD approved, and we still need to get a condo questionnaire completed by the condo complex. And the questionnaire consists of 20 or so questions, asking how many units are rented out versus owner occupied, how many units are delinquent on the condo dues, how much money are allocated into the budget, how many units are owned by one person or one entity. So all that is very important for them to answer. And if any answers don't match the guidelines and criteria, the complex, the condo unit is not going to be approved for the financing. Conventional financing, Fannie also has the list of approved complexes. However, if it's not on approved list, it's not the end of the world. We all we need to do is to order the questionnaire. But if it's on do not lend list, then it's a different story. Then we have to go into that outside the box loan types, non-warrantable condo, and see if this condo would meet non-warrantable condo criteria, because those also have some limitations, not as strict as conventional, let's say, but still some limitations there.
Okay.
So those are you kind of cut up a little bit, but those are properties like condos, some of those in Arlington, right, where they have that land lease that's running less than 30 years, so that makes them tougher to finance. Is that what you're talking about?
Well, if it's on land lease, definitely, that's going to be a problematic because it has to be a fee simple, right? Yeah, so there are a few items that we're looking at when we ask the complex to, reply to us, and it's a questionnaire. On conventional financing, depending on the down payment, it could be a limited review questionnaire only with 7 questions, or it can be full-blown review with up to 20 questions, depending on the down payment. Yeah,
okay. So if we're a listing agent and we go into a property and we're going to list a condo, and let's say that condo comes up and it is not FHA approved, when we put the listing into the multiple listing service, we have a section where we can list the acceptable financing options. My understanding from what you're saying is we would want to make sure that we do not include FHA in that, and there's really not a chance to have an FHA buyer come in there and get an exception to that. It's really difficult to be able to do that. Is that accurate, or would we want to go ahead and include the FHA in case there was an opportunity that they could get it approved if they went through the extra effort?
Well, so we for example, Prosperity, we can do we call it spot approval. If the whole complex is not FHA approved, but this person wants to get FHA loan and sellers are willing to wait for the approval, because it could take some time. We have to get documentation, all necessary documentation from HOA, and we need to send it to HUD. So it could take, even 60 days to get that done. But it is a possibility. However, I would recommend as a listing agent calling the condo association and asking them questions. Like on the questionnaire, why is your complex is not approved? And sometimes, you know, they were on approval, but then that approval expired, maybe, or maybe they are working on getting it approved, or maybe they don't really care, because getting it approved, you need to hire typically an attorney or some sort of third party to help you to get it on approved list. Maybe the condo complex just doesn't care too much about that. Or maybe there is really something that prevents them on getting approved, and they would know the answer to that question.
Yeah, that's kind of what we came across this week when we were dealing with that. You know, we called and asked those questions, and they knew. Okay.
Well, and that's another reason I think it's so important for buyers to get the pre-offer, the full approval, is because then you know exactly what type of loan they qualify for, so you can help them and their agent decide, like, not waste their times on condos that they won't be able to qualify for. I think that's huge, and you wouldn't know that if they had just done like a cursory pre-qualification, you know, just kind of said the things, and like you have to have the real approval, right?
Yeah, because the one that we had the issue with, the FHA, that could have been approved if this was a conventional loan.
Is that right?
I'm assuming, correct?
For conventional, it's possible. Yeah.
So she was thinking, hey, I can, or our client or a client was thinking, hey, I can go get this property. I'm putting certain percentage down, you know, whether VA or, you know, they may be wasting time, get excited about a property and then find out they can't get it. So that's another good point. You're on a roll today.
I'm the winner so far with good points.
All right. Well, do you have any other questions or anything? I do. And this is from one of your good clients. Kelly made a prediction. We were speaking to a client who bought a condo and is now the president of that condo association. And he was telling us that they lost their insurance because the wiring of all the buildings was the old wiring, the aluminum wiring. And they were having a hard time finding insurance. I was telling Kelly about it, and she was like, you know, I think we're going to find a lot of condos, especially after the whole Florida thing, when all those condo association rates went up after that collapse, that a lot of condos here may lose these qualifications because they won't be insurable because of I mean, are we starting to see that, or is it what are your thoughts on that?
Did my tarot cards guide me right?
Well, insurance is very important because we do look at that master policy insurance. If it has enough of coverage, if it has to have 100% coverage. So we do look at those things, and go to your point about Florida building that collapsed. After that, Fannie and Freddie, they actually made more strict guidelines on overall maintenance of the complex. So we have to look at that very closely now as well. If before it wasn't a big deal, now you know, some complexes are not going to be approved for conventional financing because of deferred maintenance.
And that's what I'm thinking, is now that more of their insurances are expiring, or their approvals are expiring rather, then we're going to start seeing more that are not getting approved anymore. How long does once a condo is gets their approval, how long does that approval last?
On FHA, it's a good question. It actually shows on the HUD website when it expires. I believe it's at least 2-3 years. I don't know exactly. It might vary depending on situation. But so it does show the expiration on FHA. For conventional, there's really no expiration, but at any time it could come off the approved list if something comes up that does not meet the guidelines.
Okay, that makes sense.
Very cool. Very informative.
Thank you.
And I would mention that, you know, somebody who is watching right now thinking, why do we even care about all this? deferred maintenance and budget and all. I think if you buy in a condo, you don't have too much control over what's going on outside of your unit, right? You actually have to be interested and advocate for that. You want to make sure that condo is in good standing, because if the budget, for example, if they don't put enough money into budget, you don't own decks or you don't own roof, right? And if decks are in bad shape and they need to be changed, the roof needs to be changed, and a complex does not put enough money into budget, they don't have enough money, what they're gonna do when they need to fix it, they're gonna put special assessment on you, meaning that if your condo fee is $300, they're gonna add another special assessment of $700 for another 5 years. So you have to cough up another $700 every month on, on top of 300 that you budgeted for. And with that, you might have hardship and you might not be able to make those payments, and then you want to get out of that condo, you're trying to sell it, but another person comes in saying, wait a second, there's $700 assessment for another 5 years. I don't want to buy your condo. You're forced to sell it for less or forgo it. So that's just not a good situation. That's why you buy in a condo, you want to make sure that it's in good standing.
Yeah, you do want to know all of that.
That's a fantastic example. There's a condo here in McLean, and I'm not going to mention the name of it, but that has a special assessment that has been going on for several years, and it basically doubled the condo fees. And you can get a nice 2-bedroom condo there for the price of like a 1-bedroom small studio in Alexandria or Arlington. And these are nice condos, but the prices have been suppressed because of that extra condo fee. And they're getting to the point where that special assessment is going to be going away. And I think they've resolved the budget issue. So it's actually an opportunity in that complex, because right now prices are suppressed. You get in there and get that condo, then that special assessment goes off and those prices start going up because now it's a normal condo. You've got a nice appreciation. But these people that have been in there for the last 5 years have been suffering because they can't get a sales price on the property.
Yeah. And that's a good point. And I'll tell you that the condo, the budget, those are long documents. They are no fun to look at. That's why you want this lovely Tatiana in your corner, because in her underwriting team, they're going to be looking at all those numbers for you.
And our brokers actually tell us not to look at them. So we have to look at it from the perspective of
like investment and stuff like that.
Violations and stuff. But as far as like the actual budgeting,
they're like, you're not qualified.
We can't advise on if the budget's a good budget or not, because if there's an issue there, then
that's not our area.
But buyers still should definitely all those documents themselves and see what's in there. 100%. It's a lot of pages, probably like 300 or so, right? But you know, you have to do what you have to do, because you miss something that's gonna be on you.
You gotta know. You gotta know. That's true. All right.
Well, thank you. Very informative this week. As opposed to all the other weeks.
Thank you. I'm sorry about the technological.
I hope this comes out okay, because I think this is a really important type of topic. So I hope the audio.
It was good. I can hear you well.
Yeah, we hear you too.
Beautiful.
Okay.
Great. All right. We'll see you next week. And when we talk.